If you're here today, you made a conscious decision that you wanted to learn how to trade the foreign exchange market or the forex market. So this is my comprehensive beginner's guide for you to understand the foreign exchange market, which I carefully created and drafted this particular PPT myself. My name is Know All Trades. You can find me on all social media platforms, Know All Trades. This is just a simple lecture that I'm going to let you understand the basics of how the foreign exchange market works. So let's jump to it. So we'll look at introduction to Forex. What is Forex trading? Currency pairs explained. Essential Forex terminology. Trading platforms and tools. Forex market sessions and timings. Basic trading strategies. Risk management principles. Understanding trading strategy. Getting started step by step. That is the ups and things. I'll get you started in how to understand, like how to trade the market, and the common mistakes to avoid, right? And the summary and everything, right? Now, this is just the beginner's guide. If you want to learn advanced and intermediate trading, you can book a one-on-one session with me. Whilst you are in the community, I'll be posting things. I'll be posting a lot of goodies also there. You can follow me, and I'm yet to create my YouTube, so you can also follow me on my YouTube channel as well. So yeah, welcome once again to Know All Trades. This is something that I created along my years of trading. I've been able to create this PPT for you to understand how to trade the foreign exchange market. You need to understand that the forex market is the largest financial market that is there. We have the stocks, we have the bonds, we have the equity market, and we have the forex market, and I think crypto too. But the forex market is the largest that is being traded, right? We have daily volume of 7.5 trillion daily volume. So you can imagine if this is the amount of money that is always circulating in the foreign exchange market, 7.5 trillion. The little thing that you are going to make is not going to affect the market in any way, because you are trading with these big banks and these big institutions, right? Now, what is Forex? Forex trading involves exchanging one currency for another, seeking profits from changes in the exchange rate. So it's basically like you are buying one currency and selling the other currency simultaneously. Okay, so most of the annotation that I tell people, if somebody asks me what is Forex, it's just a typical example that I give. Okay, you are in USA, you are sending money all the way to Ghana, right? And let's say at that time that you were sending, let's say $100 to Ghana, the rate was 12 cedis to Ghana cedis, right? And you send the money and the rate increases to 13 cedis. Instead of the 1,002 that the person is going to receive, the person will now receive 1,003. So the difference at the time you sent the money and the difference at the time that the person took the money, the profit in between, which is the 100 cedis, is the profit that the person is going to take. So basically, that is how the foreign exchange market works. That involves if you are buying and it goes up. The same way when you expect that the currency is going to fall in value and you predict that the currency is going to fall and it falls, you are going to make profits. So foreign exchange market, you can trade both sides. Either the market is going low or the market is falling. Okay. So you ask me, why do I trade Forex? Because it has high liquidity and it allows you, to exit and entry trades. It has a 24 market, 5 days a week, and the flexible trading hours, right? It has low transactional costs as compared to other market. The stock market has a higher transactional costs, right? And the ability to profit from both rising and falling market. Okay, so these are the reasons why you can trade foreign exchange market. Okay, as if you look at this side, it's opening, as I said, 24 hours, 5 days a week, and it's accessible to any person that wants to trade. So long as you have a phone and an internet connection, you'll be able to trade the forex market. Okay, you can trade opportunities based on economic, political, and market factors. Now, economic factors are like the tariffs that Trump and whatever, and the political aspects like when they are voting and those kind of things. As I'm talking to you, and there is tariff wars, so you can also capitalize on that opportunity. So which other people trade the forex market? Okay, we have the banks, we have the financial institutions, we have the corporations, and the retail traders. The retail traders are you and I. Okay, so we are just taking just a chunk of it, and these big institutions are making a lot of money from the foreign exchange market. So yeah, it is quite profitable. Now, if you look at like one other definition I also tell people is that forex trading is the simultaneous buying of one currency and selling of the other currency in a global marketplace. So basically that is just the understanding. So currency pair mechanics, right? Is that when trading a currency pair like Euro USD, you are speculating that the euro will strengthen against the dollar. That means the euro will strengthen or weaken against the dollar. It depends on the direction that you are expecting it to do, like speculating it to move. So every trade involves two currency pair, right? Two currency pairs. So when you buy one currency, you automatically sell the other because you are saying, okay, if this is going to gain strength, the other one relative to it is going to lose strength. That is how you are thinking. So profits comes from correctly predicting exchange rate movement, and it's influenced by economic and political factors. So how forex trading works. So this is like a currency pair. We have the euro and the dollar. So the first currency is called the base currency and the second currency is called the quote currency. So an example, this is how normally we quote foreign exchange prices, like the pair prices, right? So it means that when you want to buy, you believe that the euro will strengthen against the dollar, and you believe that if you want to sell, you believe that the euro will weaken against the dollar. That is basically how it works. So the key concept that you need to understand from this point is that the base currency, right, is the first, and the quote currency relative to it is the second. So this is the base currency, this is the quote currency. That is one thing you also need to understand. Now, exchange rate shows relative value between two currencies. Now, these are the exchange rates. So this is what will be fluctuating up and down. When you go to the banks, you see all these things. That is what it means. So trading positions can be buy long or buy short. That is one thing you need to understand. So these are some of the terminologies that we use in trading. So price quotes show how much quotes currency to buy based on a currency. So you just need to understand all these things. Okay, you need to remember all this that is here. Okay, so you always buy one currency whilst selling the other, something that is supposed to be in your head. Thank you. So currency pairs explained. Now, currencies are always traded in pairs, which are one currency is bought and the other is being sold simultaneously. So as I explained earlier on, you need to understand basically how all this works. Now, how to read a currency pair. If the euro USD is being quoted like 1.0850, it means 1 euro is equal to $1.085. So it means that if you want to buy one, if you're in US and you want to buy 1 euro, you need 1.0850 US dollars before you can buy 1 euro. That is basically how it means. So the first currency is the base currency and the second currency is the quote currency, like we explained earlier on. So we have types of currency pairs. We have the major currency pair, we have the minor currency pairs, and we have the exotic. So these are something you need to get note of. It says that the most liquid pairs include USD and another currency. So if you say something is liquid, that is there is more volume, there is more money in that particular currency. Okay, so we have the euro USD, we have the USD against the Japanese yen. Okay, we have the British dollar against the USD, that's the GBP against British pound against the US dollar. Okay, and we have the USD Shifi or USD francs. So the Swiss franc will say, so you need to understand this before we have the minor crosses, okay, or the minor pairs, which are the euro GBP, euro JPY, and the rest. There are so many, but I just listed just two here so that we can, go through it. So we have the exotic. Exotic are this South African rand against the euro against the South African rand and those kind of stuff. So you just take note of that. So we have the essential terminology. So you need to understand all these things when you are trading so that you wouldn't get lost in the forex. So we have the pip. The pip is the smallest movement of a currency pair, typically the 4th decimal place for most currency pairs. But when it comes to the JPY pairs, which is like the Asian, the Japanese, and the yen, is the 2nd decimal place. So you need to understand that. Leverage is one thing that will help you make money in forex trading or break you in forex trading. So you need to really take care of this particular thing. Leverage is self-explanatory. it allows you to control larger position with less capital. 100-to-1 leverage means that you can trade $100 worth $100,000 worth of currency with just $1,000. Amplifies both profits and losses. So it's the same way when you are making a lot of money, when you are losing to, you'll be losing a lot of money with leverage. So you need to understand leverage in forex trading. It's really, really good, but at the same time it can kill you. So we have the spread. Now the spread is the difference between the bid, the selling price, or the ask price, which is the buying price. So the difference between the buy and the sell, the difference in between is the spread, and that is what most brokers make money from. And other brokers also make money from commission. So it's two things. Some of the brokers, they don't use spread, they use commission based system. So commission is anytime you take a trade, they get a percentage. And we have margin. It allows you to maintain the leverage on a position. For instance, like with the leverage that we were talking about here, you will need 1% of a margin to trade. So margin calls occurs where your account cannot afford, or support your position. So we have the lot sizes in forex. So we have the standard lot, we have the mini lot, we have the macro lot, and we have the nano lot. Most beginner traders, most of the time, we trade macro and mini lot, for the market. So yeah. So trading platforms to use, we have the MT4 and MT5. It supports almost all the brokers that we have in the market, so you need to take note. It's an app, and I will go through after this video so that you guys can understand how the apps look like. But it may vary depending on the if you are using a PC or you are using a phone, it may vary how it comes. So yeah. We have the trading view. So trading view is like a charting platform where you can go and analyze trades and draw your markings and everything. So most traders, they use the trading view to analyze and everything. Okay. We have the broker. Okay, now the broker is very, very important. So this is like your bank in trading. They are the ones that place the trade for you. So back in the day, if you want to place a trade, you would have to take your phone and call your banker and say, oh, I want to buy 10,000 shares of this. That is, it's now that your banker will have to place that order for you. But right now, because of technology and advancements and everything, you can instantaneously place your trade at home. So when you click, this broker of yours is what is going to take the trade for you. So you need to select your broker based on this criteria. Okay, choose a broker that is regulated in the financial authorities. Okay, there are lots of scam brokers out there. I will give you the broker that I use. Yes, and I have affiliation with them, so I work with them. So if you want to use that, you can also use that too. And trading costs, commission, as I said earlier on, the spread, overnight fees, and all those kind of things. We have the execution speed. So this is also very, very, very important. We need, anytime you place a trade, you need your broker to place the trade instantaneously for you. Okay, we have customer support. My broker has the best customer support I've ever seen. I have most of them. I mean, maybe I'm affiliated. I know most of the people there, but their support is really, really good, and I've been trading for them ever since I started trading forex. And most of the time they hold live conferences in Ghana also. So if you're around Ghana and you're watching this video, and as time goes on, you register through my affiliates, I will get to know all those who have registered around me, and we can be able to fix a day when they are coming in town for their conferences. I can invite you to go to their conference. So you have to check the availability of the market. What currency pairs do they trade? What are assets they don't trade? Okay, deposit and withdrawal, you need to also review this. My broker has mobile money option, he has a bank option, and they also have a cryptocurrency option. So everybody can choose whatever they want to choose. Okay, now you need to know additional tools. We have the position size calculator. You need the economic calendar. Now the position size calculator is just how to calculate your risk margin in a trade, so that you know the amount you would be risking or not risking in a trade. We have the economic calendar. That is where you track all the upcoming news events, so that you can be able to stay forward of what is going to happen before it even happens. We have the trading journal. The trading journal is really, really, really important, because you need to journal all the trades you've taken along the line, so that you can be able to navigate through your best moments and your worst moments. Okay, because when you have evidence, you can go through your evidence and check that, okay, this was what I did and I lost, this was what I didn't do and I made profits, so that you can use that to adjust your trading system. Okay, we have the forex market session. And we have the Sydney session. Okay, Sydney is like Australian session and all this kind of stuff. During that time, there is low volatility. People are asleep. Most people are asleep. The only currency pairs that work around that time is the Australian dollar and the New Zealand pair. So most people don't really trade this. The London session, however, people trade it because it's 8 a.m. to 4 p.m. GMT. It has the highest volume of the trading session, which is 30% of all trades. And we have the European pairs, Euro USD, GBP USD are also active, mostly active during this time, right? And the major price movements and trend development. So we have the Tokyo session, which is the Chinese session. It's 12 a.m. to 9 a.m. GMT. So you need to also take note of this particular time. Primarily the Asian session, JPY, AUD, and NZDG are currencies that are most active. So yeah, it's moderate volatility with technical, trading focus. Before we have the New York session. Okay, so the New York session is the second highest volume and has the significant market moves. USD pairs dominates this trading activity. Major US economic news drives the volatility. Now you need to understand that with this side, this is like the best trading window. The New York, the London and the New York overlap, which is like 1 p.m. to 4 p.m. that has the highest volatility. So if you want to cap more in the market, this is the time that you can be able to capitalize on to cap more profit from the market. So we have the basic trading strategies, right? We have a lot of trading strategies. I can't tell you the one to choose, but as time goes on, whilst you are learning how to trade and you are practicing and everything, you'll be able to develop your own trading system and your own trading strategy. So we have the trend trading, we have the scalping, we have the swing trading, and the news trading. So the trend is basically you following the trend and the direction. Most of the time people use the higher time frames to trade this, okay, but it's best for patience traders, right? We have the scalping. The scalping is just basically you entering into the market, you getting off, entering, getting off, entering, getting off. That is how the scalping works. It's for high frequency traders and quick decision making, right? So the time frame can be 1 minute, 5 minutes, and then so on. And then it's for full time and focus traders, right? If you don't really have time, you can't trade this particular system. And we have the swing. So the swing capture medium to long term swings, right? 1 hour to daily charts. Hold position for days to weeks. Okay, it's best for part-time traders with job. So you can choose this. So before you are selecting even a trading strategy, you need to put all this factor into consideration. You need to ask yourself, what type of trader do I want to be? So with this, you can be able to create a strategy around this. Before we have the news trading, right? So these are people that trade around the news. It's very high volatile, quick market moves, and it's for traders who understand fundamentals. Fundamentals are basically the news, economic factors, geopolitical factors that affect a particular asset. So those are the people that normally trade this type of strategy, sorry. So we have the risk management principles. Risk management is very crucial for longevity in the foreign exchange market. Even the best strategy will fail without a proper risk management technique. This is one of the things that you really need to, you don't have to joke with, okay? You never have to risk more than 1 or 2% of your total trading capital on a single trade. This ensures that one losing trade will significantly impact your account. So you always need to use stop orders, right? Stop loss orders. Now, what are stop loss orders? They are predetermined exit points and that automatically close losing trades at a specific price level, limiting potential losses. Before we have the position sizing. So position sizing is basically, that is when you use the calculator to calculate the appropriate volume based on the account size, the risk percentage, and the stop loss distance. So it's going to help you to be able to navigate the amount you are going to risk on a particular trade. So we have leveraging limits, okay, using leverage like 10:1, 20:1 rather than maximum available leverage to reduce risk. I explained leverage in the previous slide so you would understand. So benefits of risk management, right? You need to understand, this is most of the time, this is the percentage rule, okay? So it protects your trading capital from losing streaks, it reduces your emotional trading decisions, it ensures longevity in the market, it creates sustainable and consistent results. Remember, this is something you really need to remember. Without proper risk management, even profitable traders still lose. So you need to understand this. So understanding trading psychology. Trading psychology is also very crucial in trading because, look, that is why people are migrating from them trading themselves to robots and stuff, because robot doesn't have emotions, right? So this is one of the things that you need to understand. So successful traders develop emotional resilience and mental discipline to handle both winning and losing trades effectively. I always tell my students that, look, the difference between a profitable trader and a trader that always loses in the market is a trader that always know how to control his emotions whilst in a trade. So if you understand this, you would understand what I'm trying to say. You'll be able to control your emotions whilst in a trade. Okay, so you have to be disciplined, you have to be emotionally controlled, you have to be patient, and keep journaling. You journaling will be able to remove some indiscipline that you have in your system or in you, or eradicate most of the emotions that you have, because you already have seen patterns that have already occurred. Okay. So managing trading emotions, these are some of the things that cause plenty traders to lose money: fear, greed, and FOMO. Okay, so all these are the things that allow people to lose more money. So you need to overcome these particular things in the market. So yeah, so when you want to start this whole thing, this is like a roadmap I have created so that you guys can use that to kickstart your journey into the forex trading market. So you have to learn the basics, which is what you've already learned. I mean, this is just the beginning, right? You need to learn the market structure and the trading terminology. That is when, if you want a one-on-one mentorship, you can book me, and I'll add you to my community, and I'll teach you from there. You have to practice with your demo account. So we'll link your broker and we'll create a demo account that we use to trade. So gain experience with virtual funds to test strategies, understand platform features, and build confidence without financial risk. So this, you are not going to use your own money to trade. It's just the virtual money that you are going to use to trade. Now choose a regulated broker. Select a broker that is regulated by authorities. Like as I said earlier on, these are some of the things that you need to go through. Maybe some of you might not choose my broker. Some of you might go and get your own broker. I'm not saying my broker is the best in the world, but for me, they've been the one that has been consistent, and they always come to my aid when I'm in need. Yes. And the fourth one is develop a trading plan. You need to develop a trading plan and stick to it. Don't jump from one trading plan to the other trading plan. It's not really good. You're going to lose a lot of money with that attitude. So start small and scale gradually. Forex trading is not getting rich quick scheme. You understand? So you need to understand this. You start little, then you grow the account gradually by gradually. That is how it is. Rome wasn't built in a day, so you need to also put this in mind. Now, monitor and adjust. Keep a detailed journal and analyze your performance regularly, and adapt your approach based on what works and what doesn't work. Giving you a pro tip here: focus on consistent small profits rather than chasing big wins. Success in Forex comes from a discipline and patience, not a single large trade. Those that are online saying, oh, flipping accounts, bro, do your thing. Those people, they are just doing, I mean, I'm not here to try to bring someone down or anything, but then I'm just trying to tell you, those people are doing it for clout. They are doing it just for followers. They are doing it just to get mentorship and all this kind of stuff. It might work for them, it might not work for you. I'm just saying, if you want to trade, take trading as a business, these are main things that you really need to focus on. So common mistakes to avoid: over leveraging. Using too much leverage amplifies losses and can quickly deplete your trading account. So over leveraging is not really good. I always keep on saying this: over leveraging is not good. Ignoring your risk, trading without a plan, chasing losses and over trading, falling for scams or unregulated brokers, and emotional trading. All these things can bring your trading accounts down to zero. So these are some of the things that you really need to understand, and whilst you are navigating your way or you are navigating your plans through trading, these are some of the things that you need to understand. Okay, yes. So yeah, always try to protect your capital. Okay, just Don't be overwhelmed. You understand? Like, you will understand it as time goes on. It's practice and everything. Okay, so you need to understand that this is what happens in the foreign exchange market.